Let's get straight into things. I mean, we've had the NSE 20 share index gain a total of 54 points during the week to stand at, as we saw there, 3,366 points. Just how elusive do you see the 3,400 point mark being at the moment? Because that's the next upside target that's been set.
Definitely, we saw a bit of upside movement on some of the stocks, particularly banking sector and a few on the industrial sector. But yet again, on Friday, we saw some of them actually coming down to stabilize. We saw KCB actually dipping down to levels of 22.50, 22.25, equity down to levels of 19.20. Also, a bit of activity also on Uchumi. We saw it go up to levels of about 12 shillings, but also we're actually seeing a bit of supply coming in. So we may not actually see us hit that target as of yet. But at the beginning, it's a new month. We're actually waiting to see how investors, or actually foreign and also local investors, will actually react to the available shares in the market.
Let's just draw some distinction in terms of what's been or who's been driving the markets at this stage. Because I mean, we had volumes increasing on Friday's session, coming in at 36 million shares traded compared to Thursday's 11 million shares. And you know, on this end, we seem to be getting different reports on whether it's local, retail or foreign investors that are actually driving things in the Kenyan markets. What's your perspective?
I think we've actually had not only local players in the market, but local institutional players coming into the market. Fund managers have been playing the market quite heavily in the past month, in the past week or so, and we actually saw them coming in also on Friday to actually take some of the profits they actually made in the month. And also we're actually seeing a lot of foreign participants coming in, particularly on the buy side. We're actually seeing a lot of foreign buyers coming in to actually push some of these prices where they are. But actually we actually saw on Friday a bit of local institutions coming in actually take out profits on some of the key counters that they had invested in the beginning of the month.
Talking about prices that have been pushed higher, I touched on earlier the rally on Uchumi and the fact that it continues. So investors really buying into the strengthening fundamentals of this company and the kind of expansion strategy it has in play. What's your view on the stock right now? Because for the week, it closed over 17% higher.
We actually saw most of the demand that's coming in for Uchumi is from the local institutions who are coming in to buy the particular stock. I think they actually look at the upside potential of the stock in terms of revenue and in terms of growth and in terms of the strategy that they've actually put in place to actually turn around the company and also report positive results. And I think at the levels we are seeing right now, we may actually see more demand coming in for the stock at levels of between 11.50 and 12 shillings. You may hold at those levels for the week going forward. But in terms of fundamentals, the company is actually quite strong considering what it went through 2 to 3, 4 years back.
Some quarters are questioning valuations, though, Amos. I mean, the share is currently trading way above both its 20 and 60-day EMA averages of 8 shillings 81 and 8 shillings 47, and so highlighting that a correction is imminent on the share price. So what are you making of the valuations relative to the fundamental picture?
I think it all depends on the initial investor, the people who are actually coming in to buy the stock at the levels it's trading at. What value are they looking at? Is it a short-term or long-term value they're looking at? I think right now we're looking at long-term values in the particular stock in terms of valuation. Going forward, what do we expect from Uchumi? What do we expect in terms of sales? What do you expect in terms of returns? I think that is a major thing that we're looking at. But yet again, we actually may see profit takers coming in from lows of about 9.50 to highs of about 12 shillings. I think we may actually see profit takers coming in to actually offload some of the stocks. That's what I'm saying. We may not see it actually move that much above 12 shillings. Going this week. Yeah,
well, as you highlighted already, some profit taking coming through on those big banks, the likes of KCB and Equity Bank, and this within an environment where we're anticipating interest rate decision to come to the fore, and that to be made by the MPC this week. Amos, what's your outlook on that front, given the fact that we had inflation falling back, yes, but not nearly to the extent that the markets had anticipated it would?
I think the major thing that we're seeing now is that we're actually seeing some of the banks are actually started to cut down on the level of interest that they're actually giving out, and the MPC will actually take this into factor, and we actually also seen inflation actually dip slightly, and I actually think we may actually see them either reduce the interest rate or actually leave it at where it is for the moment. I think it's a bit of a tricky situation. I think they've already seen us stabilize on the shilling side, and now we're actually seeing inflation coming down a bit. So the main issue now that we need to tackle is the interest rate which is issued by banks. I think that is a major thing that they need to look at now. But in terms of rates, I don't see them actually raising rates after tomorrow's meeting.
Just how much success do you see being reaped by tackling banks when it comes to that interest rate front and the agenda that they have? Because certainly this has been a problem that's persisted for the longest while.
I think we've actually seen a bit of success. One thing we're actually seeing is that we're actually seeing the T-bill rates, government borrowing rates actually coming down. 91-day is actually come down from highs of 19 to levels of about 16, 18. I think that's one thing we're actually looking at. And also we're actually looking at the interbank rate that banks are borrowing at. That has actually come down. Even the CBR rate is actually coming down. I think with these rates coming down, for the government and central bank to actually boost development, to boost the economy, we actually need to have lower borrowing rates for corporates and also for retailers. And I think this is one of the major things they're actually looking at, lowering the rates that we have right now at the moment. We've actually seen one bank, I think it's actually lowered its rate a bit, but actually we're actually hoping that the other banks will follow suit. And this is what MPC is actually looking at. What ways will you do that? It's only by actually either leaving the rate where it is or by actually reducing it.